Welcome to Talk Tickers. You're joining us for a deep dive into the latest earnings calls shaking up the market. Today, we're looking at Acme United Corporation. Just had their first quarter 2025 call. We've gone through it, pulled out the key stuff you need to know.
Yeah, so Acme United's Q1 results,
Well,
they paint a picture of a company dealing with quite a mixed bag economically.
okay. How'd the top line look?
Net sales were up slightly, came in at $46 million.
How compared to last year?
That's up from $45 million, so a 2% rise, give or take.
That's right. And profitability, net income.
Also nudged up a bit, $1.7 million.
Which was $1.6 million before, right?
Exactly, which translates to earnings per share growing about 5%. So 41 cents compared to 39 cents last year.
Okay, so small moves on the main numbers, but where's the real, action happening? Any areas driving things forward or maybe dragging a bit?
Well, the big story this quarter really was their first aid business. That saw a pretty strong 14% jump in sales.
14%. Wow. What's behind that?
Seems like it's down to some successful new product lines they rolled out and also getting wider distribution in the US, Canada, and even Europe.
Okay, first aid is booming. What else is moving?
Their Westcut Cutting Tools division is doing okay, seeing continued growth, especially in craft products. And DMT sharpeners also grew strongly, got into more retail spots.
So that first aid growth, is that like pulling the weight for the rest of the company?
It definitely seems to be the standout.
Yeah.
Because their European business actually saw a 7% dip in sales.
Ouch. Why drop there?
Mostly because they had a big promotion last year in Q1 that didn't repeat this time around. So it makes the comparison look a bit tough.
Makes sense. Any other soft spots?
Yeah, they mentioned Canadian office channel sales were a bit weak, but interestingly, the first aid side of the business in Canada is still expanding for them.
Okay. And are they trying to boost Europe?
They are. They mentioned new distribution deals kicking off in Switzerland and the Netherlands, and they're planning to beef up the sales team in Germany too. So trying to offset that dip.
Gotcha. Let's circle back to that slight profit increase. How'd they manage that, even with the mixed sales picture?
Well, a couple of things. First, their gross margin improved slightly, went from 38.7% up to 39.0%. Not huge, but helpful.
Okay, holding on to a bit more profit from each sale.
Exactly. And the other big piece is operational efficiency. They seem really focused on that.
So what are they doing?
They've already generated over $2 million in annual productivity savings. That's from capital projects, things they've invested in.
Like what? Any examples?
Yeah, a really interesting one is a new robotic system they installed in their North Carolina plant. It's for processing antiseptic packets.
A robot taking over jobs.
Well, yes. They said it replaced 7 employees, but the key thing is they expect the payback on that robot to be less than 2 years.
Wow, less than 2 years. That's fast.
It is. And they've actually already ordered a second system just like it for their plant out in Vancouver, Washington.
So doubling down on automation.
Seems like it. And there's more. Their Spill Magic product line, apparently it's doing so well, it's outgrown its current facility.
Good problem to have, I guess.
Right. So now they're looking for a new, bigger site. And they're planning to put in automated powder transfer and filling equipment there too. So efficiency seems key.
Automation really feels like a core strategy then, especially for managing costs. Interesting. Now, you mentioned the mixed economic picture. Tariffs must be part of that conversation. Did that come up?
Oh, absolutely. They directly address the challenging global environment. High inflation, high interest rates, the drill. But yeah, especially the increasing uncertainty around tariffs.
Primarily from China.
Yes, that seemed to be the main focus. They mentioned how tariffs on imports from China have fluctuated significantly. And this uncertainty is actually causing some disruption.
Like what kind of disruption?
Well, they said both Acme and some of their customers are actually postponing deliveries sometimes. Because it's just hard to predict the final landed cost of the goods with tariffs moving around so much.
I can imagine. Did they mention specific numbers, like how high these tariffs are?
They did mention one specific figure, saying the current tariff rate on certain goods from China was as high as 145%, which is, massive. And that figure itself has apparently bounced around quite a bit recently.
145%.
Yeah.
That's huge. Makes planning almost impossible, doesn't it?
Pretty much. So how are they dealing with it?
Yeah, what's the plan?
Their main strategy seems to be leveraging their own manufacturing base. They have 8 plants in the U.S.
Ah, okay. So domestic production helps dodge some of that.
Right. And they're also diversifying where they source from internationally. They mentioned using suppliers in places like India, Egypt, and Thailand, not just China.
Spreading the risk.
Exactly. And they actually think this whole situation, while challenging, might be an opportunity for them.
An opportunity? How?
They believe this tariff pressure could hit some of their competitors harder, especially those maybe more reliant on China or with weaker finances. So they see a potential path to actually gain market share because of this.
Interesting. Turning a headwind into a potential advantage. Okay, what about other growth avenues? Are they looking to buy companies? Acquisitions?
Yes, definitely on the radar.
Yeah.
They stated they're actively looking for acquisition opportunities,
In which areas?
both in their cutting tool segment and in first aid. And they're primarily looking in North America.
And does the tariff situation play into this M&A strategy too?
It does, according to them. They think the financial strain caused by tariffs might make some potential targets available at more attractive prices, better valuations.
So looking for potentially distressed assets.
Or maybe just companies feeling the pressure. Their approach, they said, is to pay fair prices. But they see potential in taking over companies, maybe underperforming ones, and adding value through their own operations. They reference some past acquisitions that worked out well using this playbook.
Sounds like a pretty considered strategy both for growing the core business and potentially adding through acquisitions. Did they give any sense of numbers for the full year? Any guidance?
No, they didn't provide specific financial guidance for 2025.
Why not?
They pointed squarely at the tariff uncertainty again, said it makes it too difficult to reliably predict costs and, consequently, where pricing needs to go.
So too many unknowns right now.
Pretty much. They did say, however, that they are modeling the impacts of potential tariff hikes very carefully. And they will start announcing price adjustments to customers to reflect any higher costs they face. So price increases seem likely.
Right, passing those costs on. That lack of firm guidance really does highlight how uncertain things are out there. Okay, let's zoom back in on the business segments. Cutting tools sales were down a bit, you mentioned.
Yeah, down compared to last year's Q1. But there's a key bit of context there.
Which is?
Q1 last year had a really large initial order for their craft products line, like a launch order. So it set a high bar for comparison.
Okay. So maybe the underlying trend isn't quite as bad as the headline number.
That's what they suggested. They feel the underlying growth rate for cutting tools is probably still in their typical 2 to 4% range, more normalized.
But are they worried about that segment, given, pressure on consumers?
They did acknowledge that the cutting tool business might be more sensitive to consumer stress. With prices going up everywhere, maybe people cut back on crafts or non-essentials before they cut back on first aid.
Makes sense. And didn't they mention something about a retailer bankruptcy? Joan Fabric?
Yes, that came up. It's a bit of a double-edged sword for them.
How so?
Well, obviously Joan was a customer, so that bankruptcy means lost business there. That's the challenge. But the opportunity is that Joan's customers now need to buy those products somewhere else. So Acme might be able to pick up some of that displaced demand from other retailers.
Right, okay. One more thing they touched on, smart compliance. What's that about?
Yes, smart compliance. That's their automated refill system for industrial first aid kits, like for businesses.
And how's that going?
They said it continues to get significant customer interest. They highlighted positive feedback from a recent trade show.
What's the appeal for customers?
The main thing is convenience and efficiency. It offers automatic reordering when supplies run low in a kit, which, can save businesses time and potentially money, ensuring they're always stocked and compliant.
Is it moving the needle financially yet?
They said it's not really factored into their immediate forecasts right now, but they definitely see it as a promising product for future growth, particularly in that industrial first aid space.
Okay, so summing up this deep dive into Acme United's Q1, what are the key takeaways for someone tracking this company?
Well, I think you see a company that's finding good growth in its core first aid business, which is clearly a strength.
Right, that 14% jump was noticeable.
Definitely. At the same time, they're really leaning into automation and efficiency to manage costs. That seems crucial in this environment.
The robots and plant upgrades.
Exactly. And they're trying to navigate these really tricky tariff waters by using their U.S. plants and sourcing from various countries. Plus, they're actively hunting for acquisitions.
But that lack of guidance tells a story too, doesn't it?
It absolutely does. It just underlines the sheer amount of uncertainty out there, particularly around trade policy and what that means for costs and ultimately consumer behavior.
And we see that difference between first aid, which seems more resilient, and cutting tools, which might be feeling more pressure.
Yeah, exactly. And then you've got that smart compliance system simmering as a potential future kicker. So it's a dynamic picture.
Yeah, makes sense. Now let's shift gears to our favorite speculative segment. This is not financial advice. Given everything we've just discussed, the tariffs, the automation, the acquisition hunger, what's an outrageous but plausible trade idea you've cooked up?
Okay, here we go. Remember, purely hypothetical fun here. Call it the tariff tango trade.
Tariff tango, I like it. Go on.
So Acme United is making a point about diversifying away from China using U.S. manufacturing, and they explicitly think tariffs will squeeze competitors.
Right. They see it as an opportunity, potentially.
Yes. So the idea is go long Acme United. That's the straightforward part. The audacious twist is pair it with a short position.
What? Shorting what?
Short a competitor. Specifically, find a publicly traded competitor, maybe in safety supplies, maybe cutting tools, that seems highly reliant on Chinese manufacturing, someone who maybe historically bragged about their low costs because of it. And ideally, maybe someone with a weaker balance sheet, more debt.
Okay, so you're betting on Acme's relative resilience versus a competitor's vulnerability to tariffs.
Exactly. If tariffs stay high or get worse, the theory is Acme is better positioned to handle it, maybe even gain share. While this hypothetical competitor, heavily tied to China and maybe financially stretched, could face serious margin pressure, maybe supply disruptions. You get the idea. It's a bet on divergence caused by trade policy.
That is definitely audacious. A direct play on trade friction benefiting one player over another.
High risk, potentially high reward, hinges on a lot of ifs about tariffs and competitive dynamics.
Yeah.
And I cannot stress this enough. This is absolutely not financial advice. Just a thought experiment. Do your own detailed research. Understand the risks. Talk to a professional.
Understood loud and clear. A very provocative idea, though. And that does wrap up our deep dive into Acme United's first quarter earnings. We've hit the results, the strategies around automation and M&A, and of course, that big shadow of tariffs.
Yeah, it's a company definitely in motion trying to navigate a pretty complex path forward.
We'd love to know what you think. How do you see Acme's strategy playing out? Will the tariff situation ultimately help or hurt them? Let us know. Thanks for tuning in to Talk Tickers. Join us next time for another deep dive. Stay informed, everyone.